Okay, ladies and gentlemen, good morning to everyone. Hope you are doing well. My name is MRD, then the business name that I use. Yeah, welcome to today's session, and I believe you are prepared. Hey, you can have your books, you can have your pens, and write down important notes because at times we need to pass through in our books and we read. At times you may forget. You get a point. You may forget, but when you write, you can go and do what? And do revision. Okay? Mostly for the indicators we're using the structures, market structure, and these strategies we are using, they are also important. Okay? So at the end of the day, if you don't have a strategy, you will end up changing the strategies all the time. You get a point. So we need to focus on our strategies. We need to come up with what? With strategies that we will follow. Then there you will now be seeing the change. But if you keep changing the strategies, today you are using this, the other day you are using this, the other day you are using this, you will end up not getting what you want. You get a point. The same applies when you are changing the indicators all the time. For you trade basing on indicators, but every day you go to YouTube to find a new indicator, and now and then you are putting a new indicator and you are starting to use it. The following day you go to YouTube again, you are looking for another indicator. My dear friend, you will end up not understanding any indicator how it works because you are not focused. Okay? Everything needs time. Everything needs time. When you focus and you stay using one indicator or two, there you are getting more experience because you are overusing it. Therefore, you will be good to go all the time. You will understand better those indicators, how to use them. You get a point. But when you keep changing, then you are finished. I believe for those who have been following me for several years, for some good years, I believe in my chart, I rarely change the indicators. I may change it for that day when I'm teaching you, but the following day I will report back my indicators that I love most. You get a point. So there is a reason why I keep using those indicators. It doesn't mean that I don't know other indicators. Other indicators, I understand them very well, but I have my best. Are we getting the point? I have my best. I understand about 20 indicators. 20 indicators. But I only use 2. I only use 2. I know the reason why. You get a point. I only use 2. So I may teach the whole of 20 indicators. I can teach you how to use them. But me, I had my conclusion. You get a point. I had my conclusion. I conclude. Sorry. I made my conclusion by focusing on those 2 indicators only. You get a point. I cannot say that other indicators cannot work. They work. But the one I'm using, I understand them very well. And they have been working for me for several years. You get a point. So it also, that's what I want you to understand, that you can also focus on 1 or 2 and make sure you understand them better. Where you went wrong, you can do what? You can keep correcting yourself. You get a point. Keep correcting yourself. Are we getting the point? Guys, I'm not sharing the screen. Don't think that I'm sharing the screen, because I'm seeing people are leaving and coming back. I'm not sharing the screen. We are still talking together. Are we together, guys? So the more you stay using indicator, the more experience you will gain from it. You cannot understand one indicator just in 1 week and you say, oh, I understand this indicator. No. Have enough time for that indicator. Because whenever you do a mistake, you will now correct yourself. Oh, last time I traded here, but I never came out. What was the reason? And you find yourself repeating the same mistake. And if you fail to get out as well, you will know, okay, here I will never enter at that point anymore. You get a point? Now you will know that I will not enter from here again. That will be the mistake you have corrected. But when you keep changing, for sure you will not understand where could be the mistake. Are we together? When you keep changing indicators, today you are using this one, the other day you are on this, the other day you are on this. I know. We cannot all focus on market structure without indicator and you understand it better. No. You get a point? We cannot understand at the same level. We all started using indicators. Then slowly we come to know that what if the indicators are no more? What will you do? So we ended up saying, you know what? Let's also learn the structure. So you must get them all. You can have indicators, you can have a structure. That without indicator, I can trade. You get a point? So you find that sometimes indicator can ease work. And when you apply structure, you see automatically that is what I'm seeing. The indicator, what is it is telling me, it is the same what I'm seeing on structure. Are we getting the point? So therefore, don't ignore indicators. They are also important. They are also important. Even the expert traders, they are using it. You find them putting RSI. Let me first put my RSI and see what is the RSI telling me. Where is it? You get a point. There you get more confirmation. You have confirmed with structure. You have confirmed with indicator. There, the trading will become easy for you. But you cannot tell me that straight away from nowhere you are starting to learn the structure. It is step by step. First understand Fibonacci, because even big institutions, they use Fibonacci. Then why you? Are you special? You are not. Just understand it. Because one day, one time, you will teach someone the Fibonacci and he will understand better than you. You get a point? And he can just use that indicator and he can be winning all the time. And for you who is using structure, you fail. Are we getting a point? So, never hesitate to teach someone. Just teach. You never know. You may teach him, he understands better. And he can keep correcting you now. You know what? This was a mistake. We can do this according to my understanding. The way I've been using it. This is also clear. You get a point. So, it's a matter of time. It's a matter of time. Let's have time for our analysis. Let's have time for understanding the indicators. Don't put it one day, 1 week, and the following week you don't have it there. You are putting another one. Then, if we say you teach us this indicator, can you teach us? If you cannot, then there you don't understand that indicator. We get the point. So, we need to focus. Let's not be aga-naga. Today you are here, the other day. It's like doing a scams. Today you are doing this scam, the other day another scam, the other day another scam, and you keep inboxing people. You know, there is a new one. This is a new one. We are not going to miss out. You get the point. And after 1 week, they scam you. And you start saying, I wasn't aware. But I've got another one. Can you imagine? You are losing all your friends. Them. Over scamming them. You are losing money every day and again. Because they told you, in scams you can get rich quickly. My God. Dear friends, you better focus and you forget about scams. That is my advice. Forget about scams. Me, I did scams. But now why? There's no way how I can go back to scams. We are no longer having the best friends we used to have. We lost them because of putting them in the business. For you may not be suffering. Why? Because you are putting $100. It may not be hurting you. Because for you, you promote it and you are putting $50. You are putting $20. Do you know that your friend is putting 50 millions? 20 millions, 10 millions, and for you are all about just looking at a commission, and you start jubilating, and your friends are losing money. Trust me, you will not remain the same. You will not remain the same. You cannot. So therefore, even though I am poor, I cannot do scam. If you share with me a scam, I block you. If I find on your status you are posting Oracle, I block you. There's no how you can do a scam. You know it and you promote. Can you imagine? You are very stupid. I blocked everyone. Who is doing a scam? I don't tolerate that nonsense. People, we passed through many, guys. We passed through many. There's no need. But this one is a leader. Is a leader. Every business is doing, I'll also do it. Okay. Keep following your leaders. The end will justify the means. We are here. We rather stick on trading than doing scam. If you believe in scams, then you better leave our groups. I don't believe in them. I did many of them. I know how they work. I know how they develop those scam businesses. So, there's nothing you can tell me. There's nothing you can lie me about scams. Okay, guys. Welcome to today's lesson. That was a piece of advice. You take it or you leave it. It's your own benefit. At the end of the day, me, I will never do scam again. Okay, this is Bitcoin. And last time, this was my analysis. I think I did this analysis on Monday. I was expecting, this was our Fibonacci. From here to here, it was our Fibonacci. And by then, 0 was down here, and 100 was here down, 0 was up. So that's why I put this line, the black line. I was expecting the market to touch here and come back around here, because around here it's where we had the 50 line, the 61 and 78. You get the point? Where I stopped here, it's where we had, by that time, it's where we had the 50, the 61 and 78. So I was expecting this coin, after hitting the 0 up, to drop halfway of the distance. Do you know that the 50% of Fibonacci, it is always just halfway of the distance from where the market started from? You just name them. Call this one point A and call this one point B. My dear friend, the market will always retrace halfway of this distance. Even though you don't have a Fibonacci, just put it in mind that whenever you see a good performance, the market is in uptrend, just few days, the market will retrace halfway of the distance. If you are trading, make sure you have that mind. Have that in your mind, that the market will have one day, it will come halfway. Now this was the halfway, but now it was ranging here. It ranged all the way from here up to here. But after breaking this trend line, it came at the halfway of the distance. And that's what I was expecting, that very soon, before we go further, we have to come back and collect this gap. Those are the rules of Fibonacci. But you find someone saying, it's bad to run indicators. Who are you? It's not bad. We get knowledge from indicators and we apply that knowledge on a plain chart. Get the knowledge, apply. The way we are using the smart money concept, it is the very best indicator. Very nice. The way it prints the blocks, the way it prints for you demand and supply. Now, on real chart, we also need demand and supply. Do you know where to draw them? The smart money concept indicator will show you how to draw them, where to draw them. And you can get that concept and you use it while you don't have an indicator. You get a point? That's why we use some indicators to know, okay, market has retraced 100%. Then what is your mind? It's high time we go. You get a point? So this is what I had observed by then. So you can see at the end of the day, market came back in the zone where I was predicting that it will come. And now, yesterday, I think it was yesterday, I told you if we close above this supply level, then we are going up as sure deal. And I had told you that this market is going to retest this block because this is the supply. Do you know why we say the supply? Because the cause was here. What caused this drop? Well, are you getting the point? What caused the drop? Where the cause started from, it's the supply. Then what caused this uptrend? What caused it? Where it started from, it is the discount level. Can you fail to get that? There's no way. Identify a good drop. Then look at where the drop started from. That is the supply. The market will have to go back to supply. Because this was abnormal. It was not normal. Therefore, they have to go back and compensate. Am I clear? They have to go back and compensate. They will say, okay, you know what? It's as if big institutions, they removed the money here. That was abnormal. You get a point? People are in negative. How can we compensate them? Okay, let us the market retrace and we push it back. Then for you, if you cannot wait, you are selling at loss. Yet the market is going back there. It is always a matter of time. Where do you expect the market to go? Are we together? Now, where we are currently, after closing above this block, automatically market is going up. By going up, we need to look at where do we expect market can go. Now, when you look at the chart, oh, maybe I first remove everything here. The chart is okay, like this. This is a plain chart. Can you see? Now, this was our demand level down here. It was our demand level. When you look at this distance from here to here, its halfway was around here. You see? It was around here. Now, it's where the market respected. And guess what? At the top here, it is resistance. But we can see market closed above the resistance level. Now, after breaking this, where do you think it could be our next point? But remember, I told you, our point, see how to identify the point where the market is going. Do you still remember? We said that we must follow this. If this was our downtrend, like this, if we come and break this one, we do this, we close above it, we retest. Then when we are going, we are looking at these points 1, 2, and 3. It's where we are looking at. So we are going to hit this level, and finally the last level. Are we together? Now, that means the way you are seeing this, let me get it here. So this is the important area that we need to focus at, because it's where the change of character happening. Okay? Now, like here, we have closed above the resistance, meaning this line is now support. What do you think? Where do you think the market is going? The market is going here, lower low, and this was our lower high. It means this is the important area where the market is going. Are we together? So what we do, we draw line like this. Okay? Then where it started from, it is the support, remember, and like this. We have these two areas where we expect market to go after breaking here, because here, from here to here, we don't have what we can say, this one is lower low, this one is lower high. No, it is not there. It is not complete. Therefore, our target is here. It is to this support and this resistance. But currently, since the lines, both lines are above the market, they are all resistances. That means our targets, we have 1 and 2. That is where we expect market to go. So, after closing above it here, we expect market to retest. Then we move here. Again, we move here. That is what we expect. We don't expect market to come back here. It can move up to here, then it can come back halfway. I told you, we must identify the trend. Then after trend, when you see market retracing, then it will retrace halfway of the distance. Have you copied that? I think we are clear. We are good to go. Okay? So that is where we expect market to go. It is either going to hit this level or to hit this level. Trust the process. The market will do the needful. Are we together? It can move all the way from here to here, then it can come back halfway, then it can move again. Like that. Expect that. But you don't expect the again market to come back here. That is not a structure. That is not a structure. Are we getting a point? And remember, we are doing this on Bitcoin. And Bitcoin is the mother coin. Bitcoin is the mother coin. So we are done with Bitcoin. That's what we expect on Bitcoin to move up to this level. It is supposed to move to 100, 100,000. 100,000. That is what we expect. Yes, over a few days from now, or a few hours from now, but we expect the market to come back here. And if we close above this level, then it is going here. Then after closing above here, you again go to the right hand side, left hand side, and you check where could be the next target. The next target is here, because this point is the highest point, because it started from here, then here, then again here. This is the next target we are looking at. If we close above this, then again we have this one. We have this one. So we must follow that. We must follow that. Those are the lines we have. These lines that you am drawing here, they are resistances. And if we break and close above, automatically market will be looking forward to hit next resistance. If we again close above that resistance, we are looking forward to hit the next resistance. Now the market has changed the character all the way from down, and now we are looking forward to go into the uptrend, and we expect market again to push back and move to this level. There we will know that if we happen to close above these two, 1, 2, then we are likely, I believe, the market will break the previous high. That is the fact. If we happen to close above here, then just know the market will be now looking forward to break the highest level that we have. And I believe this is the highest level, not so? Yes, exactly. The highest level, it is around here. This is it. That is the highest level. So if we happen to close above 106,000, then just trust the process. Bitcoin will break the previous high, the highest level that we have currently. Okay? Just let's wait and watch. Let's wait and watch and watch. We are done. What can we talk about? Hey, I want to hear from you. What can we talk about? Hey, put on your microphone and say something. Hello?
Good morning, Coach.
Morning, Khadija. How are you?
Good morning.
Try with one other altcoin.
What is it,
Huh.
Tabla?
Good morning, coach.
I'm okay, Khadija. How are you?
I'm fine. By the way, for me, what I wanted to ask on the Fibonacci when the line is on 78, because last time na practicinzeemu nga line eri ku 78. Nesuubira nti akatale kagenda kwambuka naye ate kakkiridde bukkirizi.
78.
And it was the Fibonacci was showing an uptrend. So when I checked the coin later, nalabidde ddala nga kagudde ddala wansi ddala. So should we also enter on 70, 80, or we only focus on 61 and 50?
Okay, thank you. I think let me correct you here, and we go to the next question. Okay. Let me get the coin here. You can put off your microphone and you follow. Okay. For example, let me look at this coin called Super, and I turn on my indicator here. And before I put even indicator, I must first know which trend is this. Where is the coin going? Do you know? Do you see that? I must know, is the coin in the uptrend or downtrend? That's what I should know before I do anything. Now, the fact is, even though we put off this indicator, this coin is in a downtrend. Do we all agree that the coin is in a downtrend? Now someone is saying, yet I'm seeing green. We are not following green. So market started from here to pump, and it went up to here, it dropped. This is what I told you. It will always come back halfway. This is the halfway I'm talking about. Now it now again pumped to here. Now have you seen something? Since we failed to come and break here, that means this is a lower high. This is an indication that the market is going to drop, and unfortunately you can see market dropped. After dropping, it even closed below this level. This is low. Are we together? This is low. Now by coming back, it stopped from here. Why? This point is now higher than this. Then it qualifies to be a downtrend. Are we together? Are we together? The reason why it is downtrend, this level. We closed below this level. That is change of character. And again, when we try to connect upper one, you see, it is in this line. Are you seeing the point? That is a downtrend. Here, before you put indicator, first use your naked eyes. What are you seeing? Before you jump into trading, first use your naked eyes. What are you seeing on the chart? And you proceed. But this one will always give you money. Trust me. Let the market pump well, and it will always come back halfway of the distance, and it will always give you money halfway of this distance again. Oh, have you copied what I'm trying to mean? If I enter from here, I'm targeting halfway of this distance. The distance was around 40%. Now I will take 20. This is what I will take. Have you copied that? I'm done. I'm done with that. Going back to the point. Let's put back our Fibonacci, and we see what is happening. When you put on Fibonacci, the Fibonacci is telling you that, you know what, this market is in a downtrend. Why? 0 is down, 100 is up. That is an indication that the market is in a downtrend. Ladies and gentlemen, are we together? Therefore, for us, what we wanted this market to close above 61, and for us we trade up to 100, whereby this coin closed above 61. But after closing below 60, after closing above 61, it dropped again. Then it respected the 50 line. It came back again. Trust me, ladies and gentlemen, when you see the coin coming back again, just know that is a sure deal. You can just enjoy the 7%. Trade it right now. Straight now. So when you find the coin, it had closed above 78 here. Instead of closing above 61, it closed above 78. Oh, my dear friend, it is a bit risky, because it will just move from here to here, then it will drop. You get the point? It will just move from here, then to 100, then it will drop. But when coin closes above 61, it is still have a chance to go and break this 78. Before breaking even 78, for 2%, 3%, 4%, you will be out. You will be out. That is the opportunity you have. But now, when you enter here, another logic you need to understand. When you enter above 61, and we fail to go to 100, and we drop, just trust me, it will drop halfway of this distance. It will not drop and break this level. It will drop halfway. Then again, it will move up. I remember we had a coin. I think we spent there like 4 days. The coin was above here at 61. We entered. It keeps moving down, up, down, up. But by moving up, it could close above 61 all the time. So I said, you know what? This coin is going to give us money. we cannot get out from it. But it dropped several times. Testing 38, going back to 61. Testing 38, going back. Now, that means even though you enter from here, you are a bit safe because your margin calls will be very small. From here, covering up halfway, that is 9% only. That is 9% only. You are covering up 9% only. You know that if I buy using the double up strategy here, if again I retrace from here, going back to 61, I will have sold. Am I clear? I will have sold. That is the fact. Hope we are together on that. So make sure, wait for the market to close above 61. If you can see this candle, that candle closed above 61. I can zoom for you. I can zoom for you. Do you see that? It closed above 61. But it retraced back a bit. And again it pushed back all the way from here up to here. Again it closed above 61. Trust me, the coin is going to 100. Now you can do what you can do currently. You can simply enjoy the 70%. The 70%. 70%. 70%. When you go to 1 hour, you can see what is happening. The 1 hour has already changed the character. You can see the 1 hour is showing uptrend. So we expect this coin to push and break this zero line. Out together, though, on 1 hour, when it was retracing on 4 hours, for you could enter from here on 50 line, and you would be out as well. Are we getting the point? That is the difference between 4 hours and 1 hour. In 1 hour, the market is in uptrend. That is the fact. Hey, who is asking?
I want to ask the question. I want to ask the question, Coach.
Yes,
please. Let's go back to the 4 hours.
Yes,
time frame. Okay, because if you zoom out properly, the candle that you said closed above 61.
Yes.
It seems as if it closed between 50 and 61.
Who told you?
I'm looking at it now.
You can zoom out also. You zoom it. This candle closed above 61. This is its close.
Okay.
If I put a line.
Yeah, she's right. But between 50 and 61, it's still above 61.
You see? This is it. This is its close. And let me tell you. Now, the candle closed at 0.2724. 0.2724. But the line of 60, it is at 0.2706. That is the line for 61, which is down here.
Is it possible that our trading view can be slightly different?
Yeah, according to the time frame of your trading view, it can be a bit different.
Oh.
Yeah.
Okay.
Because it will be according which time frame. I'm talking about what you're seeing here, UTC plus 2. You see, mine is UTC plus 2. And for you, you can find that you have UTC minus 2.
How did you get that?
You go to you go out, I think. You go to
the time
settings. Then there is time frame, something like that. So you look for the country. There is where they show countries.
Yeah. Yes, that's true.
I'm using Nairobi.
Oh.
So meaning the trading view I'm using, it is following Nairobi time frame. You get the point?
Time frame. Okay.
So at times you may find that there is a slight difference here, around here.
Yes, exactly.
Yes, at times it is there.
Okay.
So that is it. Do we have any question in background? Do we have
Yes.
any question in the background?
I have questions.
Yes, how are you?
Fine. How about you?
I'm okay. What is your question?
Sorry, question. I have a question. Example, I make a trade at 61.
Yeah.
Market on downward trend.
Mm.
Where can I put the stop loss?
Okay, thank you so much. It is a good question. Remember, I told you nowadays the signals I share as for spot, you can also trade them as for features. Now, when you trade here at 61 and you long the market, as me the way I trade, I don't expect this market to come back at 23 line. I don't expect it. When it comes to 23 line, then it will drop. Now what I do, I come here below here on 23 line, I put my stop loss here, stop loss here at 23 line. The market will always, in most cases, it will always and retrace from 50 to 38 if it is to give us money. But if it drops back to here, my dear friend, it is rare for this coin to come back at this point. At times, we have two alternatives. At times, you can again switch on your smart money if you have it there, and you check, do we have any block somewhere here? If we have, like, maybe if you can see this is what? This is a fair value gap. Let me remove. This is a fair value gap. If I have a block around here, my stop loss must be below the block. If we have a block around here, I put the stop loss below the block. Okay? But now another option, it is to put your stop loss at line 20, 23. You get a point? Yeah, yes, that's what you need to do. Okay? For example, I traded let me get it. Let me get it here. I think I'm even out. I think I was targeting 2%. Now can you see this? Are you seeing this line?
Yes.
The blue line?
Yes.
It is my stop loss. This is the fair value gap. I believe market has a tendency of coming back and retest this area. But by retesting, it is not supposed again to break it and come down here. So this is my stop loss. And for the spot, the take profit is 6%, around 4. I think I shared 4%. It is around here. You see? But me, my target was 3%. And I think I may be out around there. Because I was targeting around 15% to 20%. But it will come out as well. You get the point? The reason why I shared this now, someone may ask, this coin, it never crossed above 61. Why did you trade it? Hey, we have too many ways how we can kill a rat. Now here, we can look at this point clearly. The market moved all the way from discount level. It closed above 51. Okay? But below 51, we had a fair value gap, whereby the market retested. Market retested the fair value gap at this point. Now, when we respect the fair value gap, we cannot move back again. Have you copied that? We cannot move back again. What we are looking at, the market will go and test the block. Are you seeing this red block? It is the supply level. Because the drop causer is here. What caused this market to drop? It is here. Now, the market is going back to supply or to fill the gap. Before we fill the gap, for us with 4%, we will be out. Have you copied that? That's why I told you, focus. focus on your indicators. Apply your structure, but focus on them. Understand how they behave. Understand how they behave. I shared the signal. I had my two indicators. It was Fibonacci, it was smart money. I followed the smart money because market had tested the fair value gap. Automatically, when you see the fair value gap being tested, then being respected, then we are going to fill the gap or to retest the block, which is the supply level. Are we together? Then again, if we come back and again we close above this block, then automatically we are moving forward. If we come back, if we come and close above this level, because this is resistance. If we close above it, then we are going to the next one, the next block. Now I will have to come here. I trade up to here, 3% or 4%. I'm out. Are we together? And trust me, this coin is going to give us money. Hey, that's how we do it. The stop loss down here, I believe it will not go back there unless there is a shocking news. Hey, what else?
Hello, Coach.
Yes, please.
Hello, good morning, Coach.
Morning, how are you, Emma?
Fine, thank you.
Welcome.
Well done, sir. Yes.
Thank you.
Now, I have a question for clarification. On that golden ratio of 61. Now, if we are shorting the market, because most of the examples you have used is for long. But if we are shorting the market,
Yes.
what is the rule? Where do we? If we are shorting the market now, is it below 61.8 or what is the rule for it, so that we can see how we apply it?
Okay, thank you. Now, if we are short the market, what we need to look at, blocks. For example, at the top here we have a block. If we retest this block and we respect, by respecting I'm talking about to experience they're called what? We have to experience the indecision candles here. When you see the indecision candle followed by a massive bearish candle, just know the market is going to retrace halfway of the distance. That means you will have to short from here up, going back halfway, and halfway it can be around here, which is around 6%. You get the point? That is one way of shorting the market. Another thing, when we are short the market, of course, when we fail to close above 61, and you identify the indecision candles before closing above 61, then that means market is coming back to 23 again. You get the point? But to get a clear picture, you must be having at least that a smart money concept indicator. It must be there for you to confirm. Okay, you know what? At 61, we have a block and we have retested it. Therefore, I've seen a rejections. Then market is dropping down. For example, now, I want you to use this, Mr. Emmanuel. Let us use this example. This, when you look at this market, here, it dropped all the way from here down up to here. You get a point? Now, let us assume this was our Fibonacci, all the way from here to here. Let us assume this was our 100 line. 100 line having this block. We can see a rejection here, followed by massive red candle. This one. Automatically here, you cannot come and ask me, can I short the market? Automatically you are shorting the market here, because market has rejected this area. And what next? We are shorting the market. And I told you, we are shorting halfway. Therefore, We are shorting all the way from here. Halfway is around here, 6%. Then you are out. You get a point. So it's better to wait for rejections, followed by massive red candle, and you are good to go.
Okay, so now there was this X coin that you were treating before you came to this 1 million baby. The previous coin.
Super.
Super. Let's go back to that super, and you will. Let's say we want to do a mock try. We want to trade super now, and we want to short it.
No, we
so
cannot
that I
short
can
it,
see.
super. We cannot short super
No.
now. We are long super.
Before. Now I mean in the previous trend. The previous trend was down trend. Let's say okay, the previous trend was downtrend. Now, if we want to short the market, how can we apply that rule of always waiting for 61 above 61? But since we're coming down, is it below 61 or above? That's just what I want to understand.
Okay, let me tell
if
you
we're
this.
coming down.
Okay, now
Yes.
currently, hey, sorry, let me leave my stop loss there. Now currently, since we are longing the market, it means we are going to close above this level. We are going to close above this level, and that means a lot, because we have closed above the highs. Now the next thing we are looking at this, Now what we do, we are going to mark this area like this. We mark the whole week like this. This is our block, okay, for bearish. Now if we reject this block, we are shorting the market. If we close above this block, we are not shorting the market.
Yes.
Just to know, if we close above 61, I want you to pay attention on the highest level on the left hand side. You get a point? Pay attention, the highest level on the left hand side. Mark it very well. If we reject it, then trust me, market will drop down. You get a point? Just mark it. Mark the whole week, where it started from up, then up to down where the body closed from. Mark it very well. What we don't want the market to close above here, body to remain above here. It will be very different. But when you see the rejection within this block, rejection followed by massive red candle,
Bearish.
exactly,
Yes.
market will drop. You get a point? That's how we trade it. But before we respect this point, we are not shorting the market.
Yeah. Okay. You know, currently now we are longing.
Yes,
Currently
we
now
are
is
longing.
longing.
Yeah, we are longing.
But the previous trend, the previous trade, where you have this massive bearish candle, the previous one, the previous downward trend. Now, if we are shorting using the previous, we will short halfway after confirming that it's a downward trend. And we're going to short halfway.
This was the
Now that
rejection.
halfway.
You see?
Yes.
This was the rejection we had. Rejecting
Yes.
this area, not so?
Yes, sir.
And I told you we short after a strong bearish candle.
Bearish candle.
Now, which one could you consider? We could consider the last one, this one.
Yes.
Now remember, now let me tell you one thing. If we have
Yes, sir.
a higher low down here, this was a higher low, and market has rejected here, trust me, the market is coming back to break this level. My take profit will be at this level exactly. You get a point?
Okay.
Yes.
It is the mission. If we reject here, then the mission, it is to break this. So if I find a good bearish candle After rejections, I short up to here because it is the mission. The market is going to change the trend,
To test.
and that is the mission, to break the lowest point which is there.
Okay. Mm.
And now I short up to that point, I get out because I will not be knowing where the market is going, because at that point we had this fair value gap which it tested. We had another one here, we had a block here, we had a discount level here, so you couldn't know where the market was going. You get the point? But currently we are longing up to here back after closing above 61. If we go back here and we see rejection followed by massive candle, red candle, we are shorting halfway.
Okay.
You get the point?
Halfway.
Yes, we are shorting halfway and we are good to go.
Oh, thank you.
Okay.
I've gotten a clear understanding with this higher low. So when we are shorting, we are targeting that higher low because for now that is like our support.
Okay.
Thank you.
I have a question now. As a follow-up of what Emmanuel said, Coach, please, can we go into 1 million baby Dutch?
We go to 1
Because he
million.
was asked baby Dutch, yes.
It's here.
Yeah, yes. You know, he was asking that if we want to short the market. Okay, Coach, let us look at it this way. If you look at the support, where the last downward trend, where it was coming from, that major support up, right? It came down right down to the discount level. Then it reversed. Why don't I look at it and say it will reverse 50% way and then continue downward again? Why can't I interpret it like that?
Starting from where?
If we are starting from the orange, topmost orange, up.
Here.
Yes, starting from there.
Yes.
It went a downward trend and tested the discount level.
Yes, the discount level.
Exactly. And then it reversed. So when it reversed, why don't I think, okay, it's going to reverse 50% of the way?
From here.
Yes, from there. Yes, from there.
50% of the recent movement.
Yes, so it takes me to like
50% is here. That is the 50%.
And then why don't I assume? No, Coach. It touched the discount level. It has tested the discount level.
Of course, you leave a distance of confirmation here. We are not entering here immediately. We are first waiting for confirmation. That's why I entered from here.
Okay, good. So why don't I say it's going to reverse 50%, which it got to, and then it will now reverse downward again? Because remember, you said the trend that we should always take it that the trend will at least retest, will go back 50% of where it was coming from. And then it might now continue down. So why don't I look at this one like that?
And the reason is, at times here, we may enter from here, expecting this coin to push back at least halfway of this drop. But in mind, we know that the market is going to supply here, where we are not sure whether it will go there or not. We will be sure when we close above 61. That's when we will be sure that the market is going back to supply. But here, for you will be out already, which is okay. But again, where I'm not getting you clearly, it's from here after getting out. What is your way forward? After getting out here, what is your say? I'm not getting you here.
Yeah, so I'm saying if I get out from there, then why don't I now short the market?
Yet
Considering
the target is this. How do you short? Yet the target is this, the main target.
On the order block up.
Yes, the market is targeting the order block. to fill it.
Okay.
There's no way
That
we
order
can
block
short
is
until we
unless it's
said
respected.
until this market rejected the 61.
Mm.
Maybe there was a fair value gap around here. Maybe there was a bearish block here, and it has rejected the 61. There you short.
You come back to 50.
Yes, but now we are
Okay.
looking at the market.
Mm.
It has closed above 61 and is looking forward to
Mhm.
fill the gap, which is between 61 and this block.
Okay.
So there we
Okay.
cannot short.
But also this candle manipulated, this 4-hour candle that dropped down has been manipulated because the market is supposed to have come retraced from the order block up, retraced back to 50, then go up.
Yes,
But has been manipulated, then it came back to test the discount
the
discount price.
Yes.
So the manipulation markets are always very difficult
Exactly.
to
Now
trade.
for you, you are getting it clearly. So it was supposed to come back halfway. You see, this was the movement from here down
Mhm.
to here, and we are expecting this market to retrace halfway over the distance. But when you look at this very well, you can see it was a bit respected by this green candle. You see, it pushed back
Yeah.
again a bit,
Yeah.
but again
Yeah.
dropped.
And then broke it.
Exactly. It was supposed to
Yeah.
first push back, then again drop.
Mhm. Mhm.
So there was manipulation here, around here.
So,
Mm.
coach, I want to ask something.
Yes.
So, should it be tested for the first time or the second time? That is where we enter.
I think it should be the first time, like the way we did here. The market here was testing the discount level for the first time. Since that discount level is attached here, where the market started from, and here we are retesting it for the first time, and it respected, then we move up.
So it's the same for the 61 line.
Yes, now it is at 61 line, and it is almost remaining with 52 minutes to close this candle. And when we close this candle above 61, that is a good indication that we are targeting this level now. There's nothing
Yeah.
will stop us from reaching here.
But this
Oh.
candle, it seems like it is already tested the 61 line first, the previous candle.
We
on
don't
this,
mind
the
about
current line.
retesting. We mind about closing above
Closing.
61.
Oh,
Yes.
okay.
Yes, please.
So, Coach, I want to ask you a personal question. You know, we've been on this candle for a while, and you said it's remaining 52 minutes for it to close. Please, how do you monitor this closure? Are you constantly looking at your phone every 30 minutes or what?
No, now you can know how long you can take. From now, 51 minutes. I can do other things. Then after maybe 1 hour, I will come and check. Have we closed above or not? But I
think our
know.
trading view doesn't have that setting.
Now I've told you already. It has respected this fair value gap. It will not come back. It will go up as a must. This candle will close above 61. After closing above 61, then you will now print another one which will go above here. And I think that one, I think it will be around 1 p.m.
Okay.
Hello, coach.
Yes, please.
Thank you so much for the explanation. But I want you to explain, to give us enlightenment on the fair value gap. I don't know what it is.
Now, when we talk about fair value gap, the meaning of fair, I think now the fair value gap will come in after a good pump. Whenever there is pump, there is a fair value gap, whereby this is what we call imbalance. The market is not balancing. They are asking themselves why market pumped like this. Was it normal? It wasn't normal. Therefore, there is imbalance. Market will always have to come back to that area to balance the structure. You get the point? That is why we call it fair value gap. It is fair. It is fair value, where we expect many orders to be placed around here. Because this candle was not normal, they pumped the market. That's what they normally think. They pumped the market, meaning there was imbalance. We must come back and fill that gap. You get the point? And that fair value gap is always between 3 candles. 3 candles. It's not everywhere. We cannot put fair value gap everywhere. We must have a space between 3 candles. The one which is down here, you can see, it is the one that started the what? The journey. So now, it is the candle before this bullish candle. Is that?
There's
Hey,
somebody who's making noise.
Emmanuel Keller,
Making
Emmanuel
noise.
Keller.
Put off microphone, guys. I was still
Ila mimi
explaining.
nakupenda bure mtazamo. Kumbe
Let me first
alikuumaji
mute you.
Emmanuel, just mute them.
Do we have anyone that is disturbing
Chai.
again? Who is it?
Chai, maziwa hamna si?
This is Emmanuel.
Emmanuel from Nigeria. We are going to chase you here.
No, it's not Emmanuel
no,
from
no,
Nigeria.
Sorry.
It's
Emmanuel from Tanzania. That is from Tanzania. Okay, I was talking about the fair value gap. I'm going to explain it from here. This will be the starting point of the market, and this candle must be green. Yes, must be green, like this. This was the starting point, and now from here we now experiencing this candle, which is big and massive, the green candle. You get the point? This one may be having a small wicks. This one can be having a wick like this. Then another one down here. Don't worry, just you need to understand the concept. Just now it should be like that, followed by here we can have a red or green. Any can work, but now it can be like this, then at times it is having like a week, then another week. Now people will come and say, what happened here? Why this big candle happening here? There was imbalance. They were expecting another small candle, another small candle, another small candle. Whenever they see these long big candles, they feel like, oh, there was a pump. People were pumping this coin. Now they will say there is imbalance because of this candle. In most of the time, the second candle, at times it is not having wicks. At times it is not having wicks. Now for them, they will come here and they say, there is imbalance. What they will do, they draw the space that remain in between the wicks, this wick and this one. It's where they draw the what? They draw the block like this. Like this. Now they never considered the body of the first candle and the last candle. They considered the lowest point of the last candle and the highest point of the first candle. Now when you go back to the chart, this is what they considered. Can you see? The line started from here, where this candle stopped from. It's weak where it started from. And again, the third candle, I told it can be green or red, and this one is red. It's weak where it stopped from. It's where they constructed the block. So the block is in between the 3 candles, but they are now measuring the body which is not covered by the covered by the wick. That is imbalance. That is the fair value gap, where they expect market should now, the price should come back to that area, because it was not intended. Hey, it was not in order, guys. That is it. That's how I understand it. And whenever you find it somewhere, just know. Now, let me create for you another one here. When you look at this, what happened here? That was imbalance. This candle and this candle. Then in between, there is a massive candle. That's why you have seen this market coming back into this zone. Coming back into this zone. Therefore, here we are drawing from here up, then up to here. That is the fair value gap. Have you copied that? If you are still lost, then I don't know. You will go to trade to YouTube and learn more about fair value gap. But that's how I understand. That's how I do understand the fair value gap. It is always the gap in between the 3 candles, whereby we have to be having a massive green candle. Even you have fair value gaps for bear, when the market is dropping, we also have those imbalances. That's why at times you will see the market going back to retest and move down. I think we can have one which is let me see, do we have this? I think I shared this one as well, and it is almost getting out. Yes, Lister, we shared it.
Okay.
The same situation, but for Lister it was far better. Why? It had closed already above 61, and I think we entered in time. It had retested the fair value gap and again respected the 61 by closing above. So automatically it is coming here at 100. And another thing, we can see the change of character here. Then that is a sure deal. Okay, that is a sure deal. But I wanted to look at the fair value gap when the market is dropping down. I don't know whether I can get it. I'm saying for
so coach, what's the implication in terms of our decision? The implication of the fair value in terms of if you have to take a decision, do you let it retest it before you take a decision, or
yes,
what do you do?
let the market retest. Like here, you see, it retested the fair value gap.
Okay.
But here you can see we have 2 fair value gaps. But but they all do the same. They work as the same. I wanted to show you.
And also the fair value gap has to be filled at one point.
Yes, it has to be filled at one point. Sometimes market can fail to come back to fair value gap, but just mark that we have to come back and fill them in most cases.
Coach, what do you mean by we fill the fair value gap? I don't understand.
It's retesting, coming back to retest.
Okay.
So this coin will be good. Let's wait for it again. I had shared with you to take 25%, but again, if we close above 61, then just enjoy for the second round. I have failed to get the fair value gaps for bear, but I don't know. But it is always there. I don't know why it is not anywhere, but I normally see it. In most cases, when the market is I'm not getting it. I will share once I get. I will share one.
Leader Deus,
Yes, please.
would you recommend a combination of, let's say, for example, I want to use the auto fib and the stochastic RSI. Would you recommend the combination of those two indicators?
Yes, it's a matter of understanding them. Just if you can be able to
All right.
combination, you understand RSI, then you understand the Fibonacci, then you're good to go. You put them at once, then you follow. Make
Okay.
sure they are speaking the same language before you enter.
Okay, I get you. Because I wanted to be using these two indicators, that is the SMC and the auto feed, but the colors look to be confusing for me because they all have colors in them, so
you
it's
can
quite
change
confusing.
the colors. You can change the colors, even auto fib. You can even remove the colors. Yes, on auto fib you go to
By the way, it
settings.
makes sense. Yeah.
Yes, you remove the colors. You see, we have
You remove the colors. Yeah.
Yes, you go to transparency.
Because exactly.
Here.
For it, what
Where
makes
we
sense is
have
the lines actually.
where we have 85. You change,
Okay.
then the color will disappear and the numbers will remain. You get the point?
All right.
Yeah.
Okay.
That one makes sense.
Get you. It makes sense.
Yeah.
The lines are the most important, I guess.
Yes, the lines are most important. We don't mind about the colors.
Colors. Okay, I get you.
Yeah.
Thank you.
Okay, welcome. I think we are good to go for today until on Friday, not so? We are again.
Yes. Thank you very much.
Yes,
Yes, please.
good morning.
Morning, how are you?
I need a recap on Saga. It's like you gave us Saga, but it is becoming Saga's name.
Saga?
Could you do a recap? Yes.
The coin called the Saga. I shared the Saga.
I shared it last week.
Last week, yeah?
Yeah, within last week.
Let me see the Saga coin. I think it is around on which list? Saga is sagging you. Oh. Let me see. Can I have Saga? Okay. Let me remove one and I put Saga here. I'm going to remove Acti. I'll put it back. Acti. I put Saga. Let's look at it and we see where it is going. Okay, yeah, you are right. I shared it. So let's first remove these indicators. Okay, and we look at it, how it is performing. Okay, you can see. I think I had followed the other strategy of halfway. You see, it pumped all the way from here, then up to here, then this was the halfway of the distance, and I think I was expecting this coin again to come back to this area. I had shared 4%, and I think it made only 2%, then it dropped again. Okay, so this was my drop. And like I told you, I don't exceed. If I measure 7% as my drop and market misbehaves and drop, I will not buy margin calls. And you can see this market misbehaves. It even dropped. Let me show you here. It was supposed that is to respect this area here, because this was the last support. But now when you check behind, we don't have any low which is beyond this. And now what we need to do, we need to look at the change of character, and we look at the supply here. This is the supply. The coin dropped 23%, 24 around there, and now I think it is negative 17 to 18. Yeah, it is negative 17 to 18 currently. But now what we need to do, we need to wait. Let the market move. From here, if we close above here, you can even add money. It will be now going back to this area. Let the market close above 0.0798. 0.0798. There you can even add money. You will know now very soon you are getting out. Okay, that is very, very much important area where we expect it will recover and give you more money, because when you add more money, meaning your average price will now be closer to the current price. Now this time you can target your 10%. Now Fred, have you copied that? Just wait for it to close above there, then you can add more money such that you can try to move the average price closer to the current price, and you can target 10%. You do know, spending 1 week in the coin and you collect only 2% or 3%. Oh my God, it hurts. You better remain there and you wait for 10%. Okay, it misbehaves. The coin was supposed to respect this area. This was our fair value gap down here, and this was our halfway of the distance again. I was expecting market to respect the area and we move on, but unfortunately it misbehaves. Now therefore let's wait. After closing above 0.0798, add more money and put target of 10%. You are good to go.
Yeah, coach.
Yes, please.
Another reminder, please. Maybe sometimes you have always been analyzing on a spot market. Maybe another time when you want to use an example for us, you can just analyze on on futures, both short and long. I know they apply, but sometimes the futures analysis is different from that of spot.
No, it is not different. There is no difference. Only that at times when coin is having many zeros, like the coin like Floki, like Shib, when a coin is having like 0.0000 in features, if you put off your microphones. Put off microphones, guys. I was saying, on features, when the coin is having many zeros, they reduce them. So you find that if the price on spot was 0.00 times 4 zeros, on features it will be having 3 zeros or 2. That is the difference. But the movement is the same. The movement is the same. Though when you find
the quantity may not be the quantity
price,
of volume in trade.
Yes.
The quantity of volume in the trade may not be the same.
Because of that price, like what I told you. But the analysis, if you have made your analysis that this coin is going up, even on features, it's what will be there. You cannot say that on spot this coin is going up. On features it is going down. No, it is not there.
Okay.
The difference is in what? In prices, but not in all coins.
Okay. Thank you.
Yes. I think we are done and we have talked a lot. We need to rest. Okay, thank you so much for attending. May God bless you, and until we meet again on Friday, then we enjoy So this is the fair value gap for the bearish. It looks like this. This is it. It is here. This is what I was looking at. This is the fair value gap for bear. When we come and retest it, then we have a tendency of rejecting it and dropping back down. So we missed this good money. From here, we would be out with 5%. My God. Anyway, let's stop from here, guys.